Hi folks, it's Doc's Market Minute for Wednesday, January 6th. And the question I have on the table today is, what has happened to the market leadership? Let's look at some of the stocks that have been market leaders for the past couple of years. Netflix is starting to get unstable, although the monthly trend is still there, although we've started to see some distribution here. So Netflix is still doing okay. Facebook is still doing okay, but it's lost its luster a little bit. Be interested to see what happens with the Oculus virtual reality when it comes on board and whether that drives Facebook to the next level, although you'd probably say that it's already been priced in, right? Now here's one of the problems is Apple. Apple has absolutely been drubbed lately, and it's starting to run into a very classic head and shoulders pattern here that's leading to a downside target of about 70. So if this level does not hold here at about 100, I think it's going to be a quick trip down to 70 or so down in that area. But again, here's one of the former market leaders that's now putting in lower highs and lower lows. This is not good. Okay, here's Amazon. Amazon has been very strong lately, but has been sort of stuck in a range because we now have an exhausted monthly chart. The last time Amazon had this level of exhaustion on the monthly chart, it consolidated for about a year before it was able to work off that level of gains, which led to the next level up, but we may be stuck in a range now for quite some time. Here's Google. Google, again, is still doing okay, but at some point here it's going to run out of gas and it's going to run into the same situation as Amazon. Here's Costco. Again, Costco is doing okay, but starting to run into troubles. Is Chipotle is not doing so well right now with all the E. coli scare and everything like that. This might be industrial sabotage, but whatever, right? The price is what all that matters right now. Here's Priceline. Again, Priceline's stuck in this huge range right now, and it's just been able to get anywhere. A former market leader is now range bound. And the last one I'll bring up here is Tesla. Tesla's now been range bound for about a year and a half. Just can't get anywhere. Can't get out of its own shadow. At some point, this potential energy is going to start to move, but that could move in either direction, as we know. So that's the point here, is that market leadership from the former market leaders, mostly these technology stocks in the NASDAQ, have been really propping everything else up, while other stocks have been quietly making lower highs and lower lows. So now let's see what the actual leadership is of the stock market, and I think you'll be surprised. Okay, so here's the IBD 20. Now the IBD 20 is the big cap 20. So these are the large cap stocks that are providing leadership. We have Google, which is fine, and here's Constellation Brands, okay, which is all right. Here's Adobe, again, another tech leader. Okay, so far so good. Now we get down to stocks like Hormel. Okay, seriously, processed meat is going to be driving markets higher into 2016. Here's Tyson Chicken. Again, more processed meat. Are we really going to be driving chicken into new highs for 2016? Here's Clorox. Seriously, is the bleach company here going to be driving us higher into 2016? So this is the concern that I have, is as I look at the market leadership right now, this is what I'm seeing. I'm seeing a whole market full of spam. And honestly, this is not, I don't think this bodes well at this point. What I'm trying to do is I'm trying to remain as objective as I possibly can and say, look, we have a huge amount of energy that can either break higher or break lower. Lately, what I've been saying is that there's so much skepticism out there that I wouldn't be surprised to see the markets break higher. Well, if we lose the S&P 2000 level, then I think the amount of technical damage, as well as seeing whether or not the jobs number is going to come in strong or not this Friday, I believe there's a good chance that the Fed absolutely blew it. And if we're seeing these kind of stocks for market leadership, then we may be looking at S&P 1600 in our future later on this year. Again, that's not a prediction. Right now, what I'm waiting for is to see the market, specifically the S&P in this case. I'm waiting for it to see whether or not this is going to create a big, ugly lower high, and then this becomes more of a head and shoulders pattern, left shoulder, head pattern, And if this turns into a right shoulder, this is going to be a very truncated right shoulder, then this is going to be targeting the former breakout level, which is down here near 1600, and that's going to be ugly, folks. This is going to be a quick trip down to that area, and it's going to make everybody remind them of the 2008 debacle that we had. So again, don't read me wrong here. I'm not trying to scare people, but what I am trying to say is that if we do lose this support level, then the path of least resistance is going to be to the downside, especially if this head and shoulders level breaks. If this breaks, then we're going to see very difficult corrective price action with an eventual target down in this area. Again, this is what we've been looking for. This is what we've been calling for a long time, is to see whether or not this is a lower high or whether this is just another stepping stone in the path to the next move. We have a tremendous amount of energy here. Every time we have this much energy on the monthly chart, we get big moves, and it should not be a surprise if it goes in either direction at this point. Be very, very aware, people. Understand the price levels at which you make decisions on, and it could be a very interesting year for us in 2016. That's it for today's Market Minute. Take care. We'll see you tomorrow.